Good afternoon, and thank you for joining today's Future of Finance webinar on mapping the digital payments revolution.
Good morning to watchers and listeners in the Americas. Good afternoon to their peers here in Europe, and good evening to our friends in Asia. I'm Dominic Hobson, co-founder of the Future of Finance, and it's my privilege to moderate this discussion on the digital payments revolution. For once, the term revolution is not misplaced, and I suspect that we're still in the foothills of that revolution. For the changes technology is bringing about in payments, and by extension in the banking industry as a whole, will, by the time they've run their course, change not just the way we make payments and use banks, but alter the very nature of money and credit themselves, with implications that will reverberate way beyond money transmission, way beyond, I suspect, even the securities markets, by which I mean the markets for equities and for debt, and it will find its way into the ways we live and work and have fun. If anybody can remember what it was like having fun. Now, to help us understand what we know of this payments revolution already and how it might unfold in the future, I'm joined by four acknowledged experts in the field. Marjan Delatine is Global Head of Banking at Ripple, which provides a settlement network for cross-border payments. Gregor Dobby is CEO of Vocalink, now a MasterCard company, which builds payments infrastructures and apps. Olaf Ransom is an advisor to Finality, whose origins lie in the utility settlement coin, which was devised by a group of banks to facilitate the instant settlement of tokenized transactions. Last but not least, David Watson is head of North America at SWIFT, the global provider of secure payments and securities messages. Now, of course, in addition to our panelists, we have an audience as well, and everybody watching or listening is free to submit a question at any time to all of our panelists, or indeed to a specific panelist if you prefer. All you need to do is use the Q&A or the chat functionality at the bottom of your Zoom screen, and you can direct your questions to all members of the panel, as I say, to a specific individual, and you can do it on a disclosed or undisclosed, i.e. anonymous and private basis. Unlike most webinars, we're not planning to save up the questions to the end, but we're going to try and address them as we go along, so don't hesitate to get involved, because as at any Future of Finance event, and we're an organization which began really with physical events, we want everybody to be part of this discussion. But this is, of course, a huge and complex topic, and there's a lot to talk about, so let's get going. And I'd like to begin by considering something relatively simple. In other words, the speed of a payment. We hear a lot about instant payment. Payments that used to take days now take place in seconds. Or do they? Instant payment is not the same thing as real-time payment. We're not yet seeing money come out of the payer's account and into the payee's account in real time. The banks are still on risk. They net off what they owe to each other once or several times a day through clearing houses before settling in the central bank RTGS system. In other words, what's happened so far is that banks do what they've always done, just do it a lot faster. And that doesn't yet feel like a revolution to me. So Marjan, could I come to you first? If instant is not the same thing as real time and the payments are still limited, the banks are still on risk, and if we went to real time, accounts would presumably have to be pre-funded, because there'd be no bank to intermediate the payment if we were moving to genuinely real time. So what's your view of this? How in a way would you define the difference between instant and real time, and how much should we care about it?
Well, first of all, thank you, Dominic, for having me. I think it's a very complex question, but I will try to define that from Ripple's perspective and where we are really operating now. So, you know, our use case is our core business actually is around cross-border payments. And when you are talking about the real-time payments or instant payments, we can call it differently. You are mainly talking about the domestic markets, right? From our perspective, our technology actually, or softwares, is instant. So as long as the payments is there, we are functioning on a gross basis. The transaction is settled in a matter of seconds. But obviously, this is very simple, and the payments is not that simple. From our perspective, when we look at the instant or real-time payments, we are mainly thinking about the first mile and last mile, because obviously what is happening is that the domestic settlement or domestic real-time payments is part of the puzzle. And we are not only working with banks, we are as well working with non-banks entities, and even some sender and receiver that necessarily do not have bank accounts. So then the complexity is even more. Therefore, the importance goes back to the first mile and last mile. And what we are observing is in the markets that you have the real-time settlement payments, even if it is netted at the end, but principally we are working around the low value payment, high frequency. We are really progressing much better than the markets that are still very much on a typical central bank money settlement, because we are opening the reach. And we are connecting actually our real-time capacity to what is the local real-time capacity in order to reach as most as we can end users. So is a definition that it is complex, I would say, but the more we work with the real-time payments, even if it is netted at the end, but the better we can connect the cross-border and get an end-to-end experience that gives the feeling of the real-time.
Thank you, Marge. And I'd like to come back to that question of cross-border payments in a minute. Olaf, I'm sure that you have an opinion on this question as well.
Yeah, for what we're doing with finality and the part of business that I know well in wholesale, real-time is quite important, mainly when it's coupled to settlement finality. So you want to be able to say, this specific transaction has now settled, and then there are some transactions that are unsettled, as opposed to, I've got a basket of transactions and none of them are settled until the end of the day. So real-time is quite important in that. The feedback loops also to Treasury in the various banks are also an important matter. There's a big regulatory focus on the use of intraday credit. So all this Basel Pillar 2 measurement looks at how much intraday credit we're using, and the current setup where access is guided locally leads inevitably to this heavy use of intraday credit. If we can get to more real time and we can get away from that reliance on intraday credit, that's generally going to be a good thing right across the industry, at which point I'll stop and let someone else have a word.
Thank you, Olaf. Gregor, I don't know whether you wanted to add anything on this point, or you feel it's all been said?
I think it's probably all been said.
Mm-hmm. Okay.
Nothing to add.
Okay, let's move on and ask ourselves the question. You, Olaf, referred to the fact that the regulators are very focused on the consumption of intraday credit. So we ask the question, who really wants real-time payment? Is it consumers? Is it corporates? Is it regulators? Is it nobody? And I'm conscious that Janish has now joined us. Hello, Janish. I knew you were having difficulty dialing in, but you're a senior product manager at Fidor Solutions, a Munich-based provider of digital banking platforms. Perhaps you'd like to get involved on this question immediately.
Hi, Dominic.
Janish.
Yeah, hi. Thanks for the introduction. Yeah, I've got problems with my camera. I'm unfortunate I can't have my camera on. But otherwise, yeah, the question is super valid in terms of who wants real-time payments. I mean, if you look at instant payments in Europe, it is going to be a standard now or sooner, one or other way. Yeah, and then there are all these use cases that comes into play when it comes to peer-to-peer payments or payments between consumers and business to business, of course, and then government institutions to consumers or business directly. Yeah, so all these use cases would come into play. Up until now, you would see regular payments in the European region, but they are not instant, probably near instant, or that's how it is shown. But when we look at SEPA instant payments, the idea is growth settling, I believe. Yeah. So the only problem with SEPA instant payment that I see right now is it's got a limit of €15,000, and I kind of I've read up that most likely sometime this year or next year they would increase the limit to 100,000 euros. So for business to business payments, it makes more sense. Yeah. The other topic that we would want to address as part of the question is that what goes in for security, risk, fraud. Yeah. So as a payment service provider, they do come under the governance of a regulator, a financial regulator, or a central bank, who would monitor how payments come in and how they go up. So in terms of security, fraud, or risk, this has to be managed by a payment service provider. Yeah. So payment service providers could be banks, fintechs. I would say banks ideally are suited to they do have an upper hand because they've been in this business a longer period of time, but fintechs definitely can up their antiques as well. One key point that's been missed in the question is on how do you manage liquidity around it, because previously when it comes to payments, that up until a time that these were batch payments, you have regular intervals where batch payments would go out. So Treasury has a view on when do they have to allocate liquidity. Yeah, now with instant payments, this is going to be 24/7, 365. So I mean, it depends really that if banks have a view around the historical data of how they would allocate liquidity for instant payment. So that would be a learning curve. For Fido Solutions, is we are already a fintech. We have a bank ourselves, so we keep tracking trends, regulatory updates on this. We've been notified recently by ECB, which is the European Central Bank, that they would update us something on central liquidity management in light of instant payment. Yeah. So I think I've covered, given my opinion, I've touched the points pretty much. Happy to take any questions. Yeah.
Thank you, Janesh. David, could I bring you in at this point? Just ask you the question very directly, and if you could give us a brief answer. I'd also like to move on a bit to the cross-border payment that Marjan mentioned earlier. Who really wants instant real-time payment?
I mean, to me, it's often not necessarily, it's a question of the difference between wants and needs, basic economics. I think wanting something can often be perceived as an emotional sort of reaction that tends to be associated with the consumer market wanting something to happen earlier. Actually, I think we have to really drill into the different types of payments that exist and actually why payments are happening. So I think we often talk about payments as if they are the beginning and the end of the process. And a payment is actually part of usually a much bigger picture, whether that's trade, acquisition of goods, you're buying something, whether it's related to the securities industry, it could be a whole host of different reasons as to what drives the actual payment, which then in turn drives often what the prioritization of what's most important for that payment is. And is it the fact that it needs to happen instantaneously, or is it other factors that make that are more important, around risk, around, I think Olaf alluded to credit, I think Janesh alluded to liquidity. There's many other sort of aspects built around it that mean very much depending on the complexity of the drivers for the payment, the complexity of the bigger landscape as to why it exists, often dictates the pervasiveness of its need for real-time or instantaneous. But I think what we see is that regardless to that, I think as Janesh mentions, the market is moving that way anyway, driven by those fastest movers and driven by those people who need it more. So the whole market is evolving towards it anyway. Therefore, actually, all the reasons that people are concerns that people may have around moving there if they're not in the I need this now camp are areas that need to be addressed, or opportunities actually for people to address in terms of credit or liquidity or compliance or various aspects that help move on that journey towards real time, both domestically and cross-border.
Mm-hmm. Thanks, David.
Could I offer a view on that, Dominic?
Mm-hmm.
Yeah, so I think it's interesting we talk about needs or wants. I think the consumer expects real time. The consumer now, the modern consumer expects instant fulfillment on what they want to do. So I actually think in many markets now, the need for real time payments is almost becoming de facto. It's an expectation, I think, as much as anything. The other thing I'd say is that businesses, we do a lot of analysis about who wants it, and particularly who benefits from it. And we've done a lot of research around businesses, and businesses they have a real desire for real-time payments, just because it makes managing their cash flow significantly easier. So I think I'd say it's more than needs and wants. It's about expectation.
Okay, thank you, Gregor. Before we move on to talk about competition in this sector, we've got some questions coming in here, folk on the cross-border component here. Peter Davies says, as for the SEPA credit transfer instant, isn't the key the ability to undertake the AML CTF filtering instantly? In other words, check this isn't a financial criminal or money launderer who's making this payment. That's one point he's made. And in SEPA, he says that takes 15 seconds. So that would slow you down from being real time. Vineet Agarwal says to all panelists, with the various regulations and documents required in India, what are your views on instant payments for cross-border transactions? Again, he's saying, how easy is this actually to do with regulations in the way, quite apart from the need for correspondent banks and infrastructures? I think that the question that's interesting is how are we going to achieve very rapid, let's use a kind of neutral term, payment across national borders? Now, I'm sure, David, you at SWIFT have thought a great deal about this. Is it possible even to think in terms of foreign banks getting access to domestic RTGS systems, for example, or is the correspondent banking network going to have to stay in place?
I think there may be different questions, right? I think we're going to come back to the fact that we need to evolve as a global industry in terms of facilitating cross-border real-time payments. That's something that needs to happen. It's something that has been easier to address earlier in the closed-loop domestic environment with a single regulator position and a single control of a closed-loop mechanism. And I'm not belittling what that takes to do, but it's obviously easier to do that than necessarily in a multiplayer or the linking of multiple closed-loop mechanisms that can elude and lead into our current landscape for cross-border payments. I think when you come to the cross-border landscape, obviously the actual speed is and needs and wants are the same. You know, whether David Watson is paying, you know, his friend in the other side of New York, or David Watson is paying someone back in Scotland, it makes no difference. He still wants the same criteria of what he's looking for in terms of speed, predictability, price, all the aspects that are important when it comes to driving a payment. And that same logic applies whether you're an individual or whether you are the world's largest multinational corporation managing your treasury or your payables, receivables. I think it does get more complex when you have multiple jurisdictions involved in terms of particularly compliance. And I think the rules and controls of who can come in and who can do what, and obviously what actually stringent levels of controls you need to have in place, as every country has its own nuances. Similarly, in the current landscape, often every institution has its own nuances around how it adheres and applies to those things. So to me, I think, you know, obviously there's a bias with who I work for in SWIFT, but you know, the role of standards and those bodies like us and others who play a role in this space is huge. And I think not just in terms of bridging the different domestic mechanisms, but also understanding all players and whether they be old or new that come into this industry and this landscape, how we have that interoperability and how we have the standards and how we engage is actually also going to be critical towards both the step towards global real-time or global instantaneous or global faster, however you want to use the language or however you want to interpret it, is actually going to be absolutely key. And it's also going to be the drivers that lead to the ongoing increase in competition in this space that actually will and does drive us to be better.
Yeah, well, Peter Davey is pointing out to us that we are confusing when we use the term real-time initiation confirmation from irrevocability, and I think we'd have to plead guilty to that, certainly in my case. Marjan, the cross-border is very much your
exactly area. Indeed.
If you could give us a brief thought on how we achieve this, I'd be very pleased, because we must move on in a second.
I do agree, of course, with David about the standards and the role that it plays. And there is no magic solution for that, to be honest, because this is, especially in the cross-border, is very important. But what we see, at least in the capacity of the new technology, is how you can better validate data. And I think this is very important in the compliance space. So of course you have the standards, but you have the quality of the data that needs to be done. When you look at the way that the payments, at least the cross-border and the typical correspondent banking is happening, is that the validation of the data, despite of course many changes and improvement, still the validation of the data is not fully instantaneous. And with the help of the blockchain and the distributed ledger in a very permission network, I would say, this is not about the public blockchain network, but we have created this capacity of validating all the data. The richer the data is, and especially in the ISO 20022 context, the better and the more you can validate. And we see that if you are going through this full validation, you will never go to the settlement and the finality of the transaction unless all the elements of the transaction are fully validated. And this is happening really in our network, and we see that even if some banks are not still fully operating in real time, but those that are really adapting their processes, they use this capacity in terms of going to the nitty-gritty of the validation and moving just to the settlement and finality when everything is validated. And with that, we really diminish at most any failure or any compliance-related challenges.
Thank you, Marja. Now let's move on to how competition is being fostered by technology in this area. You mentioned that. Which of the technologies do you see affecting the payments industry? And I'm thinking here of mobile applications. I'm thinking of the apps which are running on mobile phones, but I'm also thinking of stable coins. I'm thinking of central bank digital currencies, maybe blockchain as a whole. I'm thinking of APIs. If I asked you to think about which of those technologies you think is going to have the biggest impact on payments, which would it be? Mobile apps, stable coins, APIs, central bank digital currencies? Perhaps I could come to you later, Olaf and Marjan, on this one. Perhaps Gregor, you have a view on, as an app manufacturer, as it were, which of these will have the biggest impact?
Yeah, so I actually think the two technologies that have had the biggest impact on payments driving innovation, competition, are probably APIs and public cloud. APIs link to what's happened with PSD2 and open banking, where consumers have far more, I guess, ability to allow organizations to act on their behalf and access data in order to provide them with improved product sets and improved financial information, et cetera, et cetera. And I think the APIs has been the single technology which has enabled that. We actually talk about APIs as a force multiplier, i.e. you can build something once, but it can then be connected to many different things. So I'd say APIs. And the second one is cloud. Cloud, I think the benefits of public cloud are quite well known in terms of scalability, economic benefit, etc., and the ability for people to really grow businesses very quickly. I think the key in the payment space for cloud is around resilience, and getting to a point where particularly regulatory bodies are comfortable that the resilience levels of cloud are on a par with traditional methods of providing infrastructure. But I think both of them, certainly in my space, have been big drivers for enabling competition and innovation in the payment space.
Can I ask you one specific question about APIs? You've talked about how it makes it easier to change your bank. Does it also change the way in which you're going to interact with your bank? We hear a lot of talk about push payments, for example, which would, on the face of it, possibly get rid of all the paraphernalia of the banking industry, direct debits and standing orders and the rest of it. And customers are just being, you approve this payment.
I think that, yeah, I mean, things like request to pay give the consumer increased choice, and increased choice in terms of managing their finances, how they choose to manage. I mean, I personally as a consumer wouldn't wouldn't move from using direct debits to request to pay, but I know a lot of people who would. The key thing is it gives you flexibility, and it's actually, due to the underlying technology and APIs, it's actually very easy for consumers to make these choices and make transitions. So it gives you, I think, a better way of managing your own financial position and requirements in the fashion you choose to. To me, it's all about choice. It's about enabling choice. I can't hear you. I don't know whether it's just me.
Dominic, you're on mute.
Yeah, I wondered if it was me.
Sorry, I was on mute there. You're right. Janice, you'd like to come in on this. Which of the technologies we've talked about here, and we talked about mobile apps and blockchain, and Greg has talked about public cloud and APIs. What would be the technology you think is going to be most disruptive?
I think just extending from what Gregor has been talking about from open banking perspective, I see that is definitely going to pave way for some disruptions in the payment space, especially with the AISPs or account service providers and payment service providers, trying to find innovative ways to move money between a customer account and a merchant account. Yeah, so and that's going to come through. So that basically means that there is going to be a competition in the card payments business, because then the payments are not going to go on the card rails, probably go from a customer account to a merchant account directly, of course, with the customer's permission. But I still this basically means that then the merchants then don't have to don't bear fees like interchange or acquirer fees, which is typically that happens with the card transaction. But I still think that there is still going to be some sort of cost structure which could be cheaper than a card transaction. So open banking, PSD2, they will definitely pave way for new types of payment. This will largely depend on how PSPs or AISPs, come up with innovative products and pricing. So definitely open banking could pave way. Other than that, as Marjan spoke about other technologies, I think probably we have more questions a little later on different technologies. So, but I still think that distributed ledger technology is going to be a thing of the future for sure. Because in terms of how bank doesn't have to hold data, it can share such data between different banks, and then this type of clearing and settlement can happen instantaneously. Because it takes a little over time for messages to pass. If you all know what everyone is doing, it becomes way more easier.
Thank you, Janish. Olaf, can I tempt you to talk about both stable coins and central bank digital currencies? You're on mute.
Yes, certainly. The two will come together. So I'm with the folks who just commented on, I think, absolutely APIs made all the difference in the retail end. I think as you move between retail, commercial, wholesale, what David and the colleagues at Swift have been doing in GPI, super important, because that's feeding information back as fast as we possibly can so that everybody knows exactly where they stand. The importance of CBDCs or stable coins, whichever you want to address, is basically we need something to solve for payment if we want to grasp all the opportunities around tokenization. So I'm slightly philosophical about blockchain and DLT. It may or may not be the best technology, and it's certainly not the right thing for everything. But what it did do is it forced everybody to take a look at some of their processes. And oh boy, do we have some crummy processes in financial services. We can thank our friends at Accenture for writing a fantastic paper in 2018, Banking on Blockchain, that said, hey, you're out at least 8 billion a year between the lot of you on rubbish processes, and we need to improve them. So we have to solve for payment. And this is where we get to make choices. Wholesale could end up doing account-based solutions that we've used many a time in the past. Euroclear, Clearstream, all standalone funding. This would be unfortunate. Banks have their liquidity in far too many places. I did a little test a couple of days ago with one of the Finality shareholders, not even a GSIB. And I said to one of the treasury folks, just out of interest, how many entities, Nostro accounts and currencies are you managing? He said north of 500 legal entities, north of 500 Nostro accounts, and north of 50 currencies. That world in wholesale is quite complex, and that adds huge amounts of cost. And we've got an opportunity as we switch, and Janice rightly pointed out, we've got this DLT opportunity. We make that switch, we lay out the infrastructure for tomorrow. We have an opportunity when we have to make the most of it, which is to set ourselves up in a way that liquidity can be better managed than it has been in the past.
Thank you, Olaf. Marjan, can I tempt you to talk a bit about blockchain? It was the starting point for Ripple, was it not?
Yes, indeed. I just adhere to what was said by Olaf. I think when we are talking about disruption, it's really changing the way things happening, right? It's not just innovating; it's really shifting actually the process. So the way that of course, you have stablecoin, you have CBDC now is becoming much more relevant even with pandemic impact. But what is important, I think, is going back to what is the real cost of the cross-border and what was the promise of the blockchain, which is about democratizing the payments. And this democratization will not happen without real thinking and adaptation of the processes. And this goes back to the cost of liquidity at the end and the way that liquidity is handled. I think when you look at the very initial use case of the blockchain or public digital assets in terms of becoming a bridge asset between two fiat currencies, is very interesting. This is transforming completely the way that the payment is happening, and is I would say is an important leg in terms of really shifting things, because today whatever you do, you have to pre-fund, you have to keep liquidity in the destination in order to operate. This has costs, and of course it's probably revenue generator for some banks, but for the smaller banks, for local banks, this is a very costly process. So I think rather than thinking about fancy thing is to understand what is really doing. So if you can completely shift the way that the liquidity is moved, and you just source on-demand liquidity when you need it by using a much more efficient instrument such as digital assets, could be public, could be CBDC, could be stable coins, you disrupt, and you can progressively get to this democratization. So that would be really the way that we are looking at a digital asset is really based on this use case for institutional segments.
Okay, well, economizing on liquidity is coming through as a strong theme in a number of things that have been said. We've had an interesting question here, which is, do we expect one of the FANGs, by which they mean Amazon, Facebook, whatever, to build an alternative payments infrastructure? And I think the reason that's interesting is because, in my mind at least, infrastructures provide a playing field on which innovations can take place. Lots of entrepreneurs can start new businesses. And at the moment, all the innovations which have taken place in payments seem to have happened on existing payments infrastructures. They've all made use of things. So would competition be vastly increased if we had a totally new infrastructure? And I have in the back of my mind the thought that maybe the mobile phone network is a new infrastructure, which has only really been exploited in terms of apps, mainly initially from non-banks, but now increasingly from banks, but they're also running on existing infrastructure. So my question is, if we got a totally new payments infrastructure, would that increase competition? And Gregor, I bet you were dying to answer this question.
I think the way I would answer that is, I would say that the key thing is what problem are we looking to solve? So if there are use cases and specific new products and services that cannot be provided within the existing infrastructure, then sure, look for a new one. But I don't think that I'm not aware of any new I'm not aware of innovation being held up by doing it on existing infrastructure would be my key point. I think that you continually need to refresh the infrastructure, and you need to enhance it with things like a move towards 2002 messaging, which does enable use cases. But I actually have a view that competition takes place on top of the infrastructure, and the key to successful infrastructure is collaboration. And actually, I think the requirements for the infrastructure are certainly to enable innovation, but not to enable innovation to the detriment of resilience and protection for users against cyber. So I think I don't think that there will be new infrastructures that are used by new entrants in order to compete. I think it will very much be how can we innovate on top of the infrastructures that are already in place and working reasonably well.
Marjan, do you agree with that? Do we need a new infrastructure or not?
Well, I think I partly agree with Gregor. You know, you cannot change the world, you know, with just technology. Of course, we can dream about it, but I don't. I'm not a dreamer, to be honest. So I realize the fact that okay, the rails are. When you look at the rails, they belong to 70s. There has been many innovation, of course, with the fintechs, with the incumbents in order to improve. But I think the one that it is differentiating a lot is the use of API. So if it already enables the banking industry or the financial industry to become more well-versed in the usage of API, I think this is already changing things. But to be honest, there are certain limitations in the way that the technology is. When we get to the Internet of Things, when we get to micropayments, when we get to the usage of multiple devices, I'm not very sure, to be honest, that in a longer term, the way that the rails are designed could really cope with all this, the adjacent, I would say, technology requirements. So I think we cannot move everything at the same time. But I think that the process that we see is how you can move in a nice way things to a better technology. And I think that's how it works in the way. There is no big bang, to be honest. I don't think so.
David, so we're evolving towards an infrastructure which can support Internet of Things and micropayments as well. We're not there yet. How's SWIFT evolving to cater for these new needs, emerging needs?
Yeah, I mean, first and foremost, the point around new infrastructure, I think we've always got to understand what we're defining as infrastructure here as well, and what role would the fines play. It's always a common question we get in these types of environments. But for me, I think it's not about infrastructure necessarily the question when we think about that. It's actually about network, it's about the community, it's about who plays in this space. And I think the fact that we see new players coming into the world of payments, I think actually is a sign that innovation can happen in the current landscape. You know, some of the attendees of this session, some of the companies on the panel, you know, their companies didn't exist 20 years ago. That just shows that, well, innovation is happening, and there are, you know, and can happen in the current, you know, landscape with the current players, or the current players can set up consortia to look at new things and do different things, which actually drives innovation on the back of that. And I think what we see from a SWIFT perspective is that when we were created back in the 70s, right? It's a long, long time ago. I would argue I wasn't alive when SWIFT was created, but I may get challenged on that. But you know, it's safe to say that it was a very innovative solution to a market problem. And I think that market problem of how we move and transact and engage globally in an electronic world securely rather than paper-based and various other things, I think we are at a bit of a pivotal moment of an industry that started a few years ago and will continue for a few years, which is that evolution to the new world. And I think I like some of the other panelists, I don't see that as a revolution at SWIFT, and we at SWIFT don't see that as a revolution, but we definitely see it as an evolutionary change, and we will evolve in parallel. I think the need for that upfront predictability of price, of speed, of you know, the move to instant funds on account in a larger landscape are all things that we're looking at and driving. We actively engage in conversations and encourage conversations with central banks, technology providers, and others around central bank digital currencies, as well as around tokenized assets in the security space, which is obviously a large part of our business also. And we're also seeing and discussing a large scale shift around the evolution from messaging to transaction management as well, which is that idea of a point-to-point post-person role that we play is certainly a valid one, and will be a very valid one for a long, long time. but also the idea that the capabilities around transaction management instantaneously between different players in that chain at once and in different ways is something that we will very much strive towards as well. So very much an evolution away from pure messaging to transaction management over time, but in a very evolutionary manner. I think we'll see that large scale change come to the industry.
Janice, can I just ask you very quickly to address directly the question we've been asked? Should the payments industry be concerned that Amazon or Facebook will provide a rival infrastructure to the existing infrastructures?
As going with what other panels have said, the payment infrastructure has been in place since 70s or even maybe even earlier. But I will take this into perspective that there was a discussion that I was part of few weeks back, with a bank asking that, it's a European bank, was asking us that, hey, should we sign up to RT1 instant payments or TIPS instant payment? Then these are instant payment rails in Europe, yeah, and they're backed by different authorities. RT1 is from EBA, European Banking Authority, and TIPS is backed by ECB, which is the European Central Bank. So our argument was this, that RT1 has more banks on it, so maybe for better reachability you need to go there, and then later on you need to go to TIPS. TIPS is touted as for pan-European expansion. Yeah. So if you look at the complexities of this, you have a payment market and you have a payment market infrastructure. Yeah, and then you have all of these separate payment technologies. You know, RT1 is there, then there is ECB with TIPS out there, then there are regional payment infrastructure. You know, for instance, the Nordic countries, they have something called P27. Yeah, so that is for reachability within the Nordic group of countries, and then they plan to connect to TIPS. What I see is that if you want to innovate, you kind of need to standardize your payment infrastructure to some extent, at least with the preview of instant payments. Yeah, for one example of this is that back in India, that they have something called instant. It's called IMPS, I think, in the instant messaging payment service, and they created an API layer on top of it to it's called UPI. It's called Unified Payment Service. So what it basically does is they standardize the layer underneath, expose the APIs, so that payment service providers can allow their customers to make payments to consumers, to business, and even they rolled out requests to pay. Yeah, so a merchant could request a customer to pay through a mobile number or email ID. So what you see is that if we wanted innovation or cheaper pricings to end consumers and end business, then the underlying payment infrastructure should standardize. By and large extent of this is, for instance, adoption of SWIFT, adoption of the ISO standard, which is the ISO 20022, and it is touted as a standard for financial services messaging. Now imagine that if this standard is adopted on a global scale, which could probably converge different payment markets together, yeah, it becomes way more easier, that we are not regionally bound, we are not regionally barriered, that we could probably extend our payment landscape at a global scale. But then of course it does brings into the play of how do you monitor AML, how do you monitor risk and things like that, but then these should be simplified as well. So what I like to say is that the underlying payment infrastructure, if it is simplified, it brings it makes a lot more easier for payment service providers to have access to it, and then with quicker access, streamlined access, you do definitely get innovative products and cheaper pricing.
Thank you, Danish. We're getting new infrastructures in Europe. Some of the things that you said, and obviously conforming in the ISO 20022 standard makes that easier. I'm like to move on now and just to ask about one other question which has intrigued me for a while. If we look at the traditional world of payments, by which I mean physical cash and bank accounts and chip and PIN, what that does provide to consumers and companies is trust. In other words, the payers and the payees know that the payer knows that the customer is who he says he is, and the payee knows that the person paying him is good for the money. Now, which technology would you say is well placed to disrupt that role which the traditional industries pay. We hear a lot in this, well, tokenization is being used already by payments apps, of course, in the blockchain world that you're in, Olaf and Marjan. You know, permission networks talked about a lot, but the one which seems most exciting to me is digital identities. Marjan, perhaps I could come to you first. Do you see them as a game changer in building trust in new ways of doing payments?
Yeah, I do agree, Dominic. I think blockchain, I mean, the essence, the foundation of the blockchain is trust in a trustless world. You see, but the thing is, not everybody has a PhD to understand what is blockchain, and definitely I'm not the most technical person. But yeah, I think the possibilities that you have within this new technology is limitless. The thing is, then you really have to find a use case. And I think digital identity, the more we work with our community, we realize that the more this subject is coming on the top. Because you can validate data as most as you can, but creating a standardized way throughout the digital identity is very important. And honestly, blockchain provides this capacity. I mean, gives you this possibility to build it. But you know, everything at the end, especially when you are in a payments world, is a small world because you have usual suspects. Now, of course, it's getting to the fintechs. There are different layers of the payments, let's say, providers that coming into that. But we realize that those smaller entities are even more, how do you say, vulnerable because they need more actually help for standardization. So I do agree with you. I think digital identity is the heart of compliance, is the heart of many issue that we will have with the Internet of the payment, Internet of Things. So yes, I think, and blockchain, artificial intelligence are those technologies that will help that.
Gregor, digital IDs, the future of trust in payments.
Yeah, I think that you're right in what you say about traditional methods having more perceived sort of security around them. I think I would say that the industry, you know, in real-time payments is catching up. So the utilization of advanced analytics combined with artificial intelligence is enabling some solutions. We've launched a couple of products in this space to help better protect consumers around use of their bank accounts for illicit purposes. I personally think that digital identity is the next revolution. I've thought that for a while. I think it is the ultimate kind of combination of available technologies, of which there are quite a few that need to combine to provide an effective digital identity versus real economic benefit. So I do think that digital identity is going to be the biggest game changer in the next few years. I actually think that one of the outputs of COVID, the COVID crisis, I think that it's probably actually going to speed up the move towards digital identity as people look to do more and more things digitally and remotely. So I think it's a very exciting time for digital identity. So I would agree with the statement.
Thanks, Gregor.
Maybe Dominic, maybe just one thing I'd like to just add to that maybe is that since he asked a question, it sparked a thought. But I was on a panel recently with Peter Davey actually, and he said something around this topic that really stuck with me, which was the if you take the example in India where they did the digital identity initiative first and then looked to the sort of move to the real-time payments and the mechanisms, etc., off the back of it, you actually see how the power and speed that things can move and change. Whereas if you look at the rest of, or maybe look at some other locations that kind of went with the real-time payments first and are now trying to reverse engineer views on digital identity to make those landscapes better and easier and leverage more services. Actually, I think that use case is a great example to show the power of an enabler, the digital identity, however you choose to solve it. There are many more other ways than how India did it, but the power that it can actually bring to then the facilitation of innovation and the acceleration of the adoption of that innovation can be quite powerful. And I think it's something that really does resonate with me.
Thanks, David. Let's move on to think a little bit about how we get from here to there. And Olaf, I'd like you to give us some thoughts on this. we've talked a lot this afternoon about how technology is driving change in the payments industry. But as I said at the outset, it seems to me that eventually technology might start to cause change in the nature of money and credit itself. In other words, at the moment we have money which is really fiat currency issued by central banks. It's multiplied by these fractional reserve banks that create commercial bank money. Some of this is in notes and coins, but most of it's in bank deposits. What if we end up in a world created either by blockchain or cryptocurrencies or some developments of the cryptocurrency world where we have multiple different currencies? We have a Manchester United coin or a British Airways coin, or some other football club could issue its own currency, which could have potentially devastating effects across the securities industry, let alone the money industry. So where would you say that the current payments industry incumbents would be if we, how likely is a world like that? And where will the incumbents be if we get one?
Hey, let's start with how likely. I mentioned in a comment I made earlier that we have choices to make as we now lay out new infrastructure. We really do need to make those choices sensibly. For all the things that may be wrong in the payments world and for all the comments that I've made around liquidity, and it's a bloody expensive thing to have, we've optimized quite well. It is quite possible that we make some really awful decisions as we adopt blockchain and DLT. It would be really awful to have multiple stable coins in the wholesale business. The wholesale business of funding and liquidity is difficult enough today, and I'll go back to that example I quoted of a relatively small bank with its entities and bank accounts and all the rest. The idea that there'll be single issuer stable coins and this will solve the problem is really not going to work. None of those single issuer stable coins will be of the slightest use outside of the four walls of the bank that issues them. If you imagine if somebody said to me, I owe you $300, but here's some Citibank coin, and David owes me $400, and he rings me and says, mate, will you take some JP coin? I would have to do real-time risk management in my payment systems to figure out whether I should accept that money if I did my work properly. All of us on this call.
Can't the machine do that? Can't the computers do that for you? Isn't that the point?
Yeah, right. Everyone on this call will be retired and paid off long before the banks can do that live in real time in their payment systems. And even if you could, then I'd turn around and say, Dominic, I now owe you $400. I'd have to ring you up and go, well, I've got some Citibank coin and I've got some JP coin. What would you like? That whole process would become absolutely torturous. As much as I'd love to ring you and we could talk about the cricket or the weather as the Englishmen normally would do, that's a terrible process. So there is this risk as we now turn to tokenized markets that we take a step backwards and just absolutely mess up wholesale payments in several ways. So that does, as a plumber for banking, that kind of worries the hell out of me that we make some dumb decisions.
Janice, did you want to, are you as pessimistic as Olaf is about the world with multifarious currencies issued by multiple issuers? Or do you think that's a serious medium-term possibility?
I agree with, I kind of agree aligned to what Olaf said, because I haven't seen anything anything positive having multiple currencies. Like imagine you have a Carrefour, you have the retail store Carrefour issuing their currencies, and then you have another retail store issuing their currency. It'll be difficult to kind of map and match them, and imagine the risk that needs to that needs to cover up as well. So how does this play in? So this is where this is where that we kind of need to have standards around it and probably think through before making more goof ups around that, because it will definitely come in, because monetary values is underlined with the risk that someone owns, and then that risk has a monetary value assigned to it. So this is why that it needs to be thought through. Probably we need more standards, if everyone starts to issue currencies.
Just, we've only got about 5-10 minutes left now. We talk about what might happen to the traditional banks in this industry if it evolves in some of the ways we've described. Payments have been a good revenue stream for them. They recognize now, and some of you have mentioned this, they need to develop new products, new revenue producing products, probably based upon data which they collect from their payments activities, among other things. Many of them are struggling with legacy technology systems as well. So if you were running a bank, how confident would you be that you could transition successfully to this new world of creating data products with your existing technology stack, as it were? It's a difficult question, and it's a multifaceted one. But Gregor, is this something you've thought about? How you could help banks make a transition, if you like?
It's clear that there are some technology legacy challenges for a lot of the big banks. The one thing I always remind people of, though, is that there's two kind of starting positions for this. You could start with a technology challenge, but a significant customer base, or you could start the other way around. And I would say I would always rather start with a significant customer base and fix the technology challenges. I think increasingly you're seeing solutions from the supply chain to help with the legacy challenges. For example, if you look at the open banking space, we've developed a platform called Connect, Open Banking Connect, which allows through one API connection access to multiple organizations on the other side. And I think we're not unique in that perspective of trying to address the legacy challenge. I think the banks themselves are also looking at different ways of addressing the legacy challenges. If I look at the UK banks, a lot of them are building digital capability almost to the side of their legacy technology. And a lot of them are on the journey to utilizing new technologies like public cloud, for example. So I think the banks are starting to address it. And again, I think in terms of driving new revenue streams, they start from a strong position, which is an existing established customer base. And I'd say that customer acquisition is more difficult than addressing legacy technology.
Now, Olaf, you said a few minutes ago that I'd be retired by the time banks had systems capable of keeping up with one of the things I described. Now, I'm a young man, so we're giving them a very long lead time here. But if you were advising a bank on how to make this transition successful, what should they do about their legacy systems? And how confident are you they can develop overlay products, probably data-based overlay products?
Let's start with the latter. I think if we look at the world of stablecoins, which you asked about before, I think the new opportunity is the market side of the business, that suddenly liquidity becomes a thing you can trade. In that sense, I think the banks will be well placed. I think there'll be new venues where you do those transactions, but what you record in your books and records won't change too much. So I think a transition from just making a payment to making a market in liquidity, I don't think that is particularly difficult. The bit that I think on the client side really hurts is the cost of maintaining all the legacy infrastructure. So NatWest took a crack at this. They've sadly abandoned it, but last year they decided to try and set up a new digital bank with the goal, with a thing called BOW. And they said, look, we're just going to stop throwing money at all our legacy infrastructure and trying to keep up. We'll start a new bank, get the initial clients going and then migrate. It didn't work out for them. But somewhere in that approach is the way out of the morass that is legacy systems. There's stories of everybody in the States recently getting caught up with suddenly realizing they'd love to change some programs, but they were all in COBOL. And those who know COBOL are even older than the two of us, Dominic. So that was a problem. So I think the liquidity is a product, and I think the legacy thing is how to get out of those legacy infrastructures. How do you get to new tech without spending so many dollars just maintaining the status quo?
Mm-hmm. Well, I think that Gregor and Janis could certainly help you. I'm conscious now we're sort of reaching the end of our time, so I thought we might just close by thinking about the pandemic, which is the reason we're meeting as we are today, and how many of us have been living and working for many weeks. Do you think that the pandemic, one of you mentioned this, I can't remember who it was, that actually more digitization would increase as a result of the COVID-19. But do you think this pandemic has accelerated what was going to happen anyway, or has it actually slowed it down in the sense that investment decisions are harder to make, acquisition decisions are harder to make, or maybe it's started some genuinely new trends? Marjan, what's your view? Has it speeded things up, slowed things down, or led to some exciting new developments? I need to unmute you.
Excuse me. Yes. Yeah. The way, if you look at globally, I think, in our opinion, this is pushing the agenda of the digitization. Now, again, is how this is going to happen in different markets is different. We see that, and especially we are operating a lot on the remittances world, and this is a very cash-based world. But already there, we see that there are some differences in the markets. Philippines is still remaining, even despite the pandemic, more cash. When you look at Indonesia, they are moving faster into the digital. When you look at our oversight and the governance around that, this is becoming, at least the CBDC story is becoming part of the agenda of the central banks more rapidly, which is creating the digital representation of the fiat currencies. So to me, honestly, I think this is going to push forward this agenda. Now, how long is it going to take? What would be the best? But I think they will realize that the technology that we have today cannot cope and cater the full digitization. And then I think the question will only start to rise.
David, you've heard Marjan say that it's speeded up central bank digital currencies, at least, probably. What's your view? What's the pandemic done?
Yeah, I think we can. I'm a big believer that how we react in history can predict the future, and I think if we look at other scenarios we've had that have had large impact on the world, you see two things happen. You see an acceleration of innovation by certain players and segments, and you also see those who either consciously choose not to accelerate or to invest at a time like this, but maybe decide to contract or have to contract, don't have the luxury to take the advantage from it. Actually, you see sufferance there. So from a corporate perspective. So actually, I think what we'll see as a result of this is we would in any such time as we will see certain aspects move faster. We will see definitely an uptick in the usage of electronic payments in sectors where we had seen it slow down in the past. We see an increase in trade finance products and services that may have been around for quite some time, but there's been no real take up of them because the paper pieces worked and people were familiar with it. When you can't ship documents around the world in the same way, what we're seeing is actually an uptick in many of these trade finance activities. We're seeing people asking to invest faster and quicker in certain strategic shifts that we're looking at, while we see other members of our community asking us to slow down. So I think the question's never as simple. We see it across a broad spectrum of aspects. I think we'll definitely, those who see this as a time of opportunity, but opportunity to help the world move, evolve and move past and actually take advantage of how to prepare for the future, are the ones that certainly have a large area or a large concept of being successful, but only time will tell.
Okay, thanks, David. Janis, I've noticed my local shop won't take cash anymore because it's concerned it'll be covered with the virus. What would be your number one development as a result of COVID? What's it speeded up? What's it slowed down? What's your view?
I was tracking the news on how the government moves money, as part of relief campaigns. There's been this news out there saying that the governments would pay people, who suffered, who's lost their jobs due to the COVID situation. Now imagine that the money taken, the time taken to issue this type of money, and if it's not instant, how long is it going to take? Yeah, so there is definitely this has been eye-opening. Yeah, like we are in the new era of technology. We do have the processing power. Then why does it still take 3 days to get my money? This is just not only for relief funds. I mean, it is also applicable for pension payments. It is applicable for other type of payments as well. So there's definitely going to be a need of revolution in terms of how we actually perceive currencies. It could be in the form of digital currency. It could be in the form of having a better infrastructure, so that you kind of have access to real-time credit, that you don't wait for it. It's we need to get out of that wheel of waiting for 5 days or waiting for 6 days to get my credit. So that should definitely change.
Now, Olaf, we all end up with accounts at the central bank, and we can be paid when we're furloughed. We can be paid instantly by the central bank off the central bank balance sheet. Do you think that COVID-19 presages developments like that?
I think COVID-19 will push some developments in that area. I don't think everyone ends up with accounts at the central bank. So one of the things we talked about earlier was identity. And it's been very clear in a lot of countries, the US particularly, that they had trouble getting money to people who needed it. All of their infrastructure was basically set up to cut checks and put them in the post, even after they'd gone through whatever manual process was supposed to be there. So I think there is certainly room for helping both in emergency times and even in normal times. How does government give cash to people who give payment capability, at least, or money to people who need it? I think COVID-19 will help in that regard. And in fact, the technology push may well be good for control as to where money gets spent. I was talking recently with somebody who talked to folks in New Jersey, about effectively creating a digital, let's call it currency, a digital payment capability to digital money that then could be controlled how money was spent. So I'd expect some innovation in that area. And the States is a good example because they're still so far behind for an advanced economy, still sending checks in the post. Over here in Switzerland, when we distributed aid to people, we didn't have that problem. Everyone had a bank account. It just was a total non-event. But I think COVID-19, I'd expect it to be useful in that regard.
Thanks, Irv. Greg, a last word from you on this topic. What's COVID-19 changed?
Going back to what you said, there's been a massive change in people's usage of cash. We've seen, I think it's public domain, reduction in ATM transactions of somewhere 50%. If you look at the migration from cash to digital payment, some of it is down to people probably not understanding the art of the possible, and I think that COVID has driven them to actually use new methods of payment that they were not previously aware they could, or that applied to them. And I think you'll see a small number will probably return to cash, but I think the situation has probably accelerated the reduction in the use of the cash probably by a number of years in a very short space of time.
Okay, that's interesting. Thank you. Now we have a couple, just before we go and wrap up, we have a couple of questions we haven't answered. And the first one is, can you explain the difference in simple terms between all the different payment infrastructure providers, i.e. between FIDO, Form3, Vocalink, Bottomline, and SWIFT, of course? Now, I guess not all of those would be described as payment market infrastructures. What I had in mind was clearinghouses, automated clearinghouses, and RTGS systems, and things like SWIFT, whereas I would see FEDOR, Form 3, VocaLink, bottom line, as private commercial technology vendors. Is that how would you describe yourself, Gregor? That's a good starting point, and then perhaps we can ask Janis to describe himself.
I would say that we are a provider of infrastructure that's typically deemed critical national infrastructure. So we're centrally used managed service infrastructure providers, and then we provide a suite of applications and services on top of that infrastructure.
Okay. So who would be just for the benefit of our questioner, who would be a typical client of yours?
For the critical national infrastructure, it would be typically a central scheme body. So in the UK, Pay.UK, in the US, TCH, and so on and so forth. For our applications and services, it would more likely be it would be a financial institution typically.
Yeah, so you're basically providing payments infrastructures to payments infrastructures, really, aren't you?
Well, I would say that our payment infrastructures are underpinning economies of countries.
Uh-huh.
Our applications and services are enabling participants in that infrastructure to compete on top of it.
Yeah, I just meant Pay.UK is the UK payments infrastructure, or clearinghouse, if you like.
Yeah, so we're the supplier to them.
Yeah. I hope that's clear. Janis, how would you describe yourselves? How would you describe FEDOR for the benefit of our questioner?
So if we take a high-level view that, to make payments, you have a CSM, which is clearing, settlement, clearing and settlement. So we are not that. We are 2 levels away from that. We connect with a payment infrastructure provider, and then we have direct participants on our payment infrastructure provider. So typically banks, and we expose APIs for payment services, and financial institutions or banks can consume those APIs, and then our model is based on being a managed service provider for the payment business.
Mm-hmm. David, how would you describe SWIFT?
Yeah, I mean, we're a community that provides a network for cross-border transactions. Our goal is instant and frictionless cross-border transactions. We have members. We have 11,500 members in hundreds of countries around the world, primarily financial institutions, but also non-bank financial institutions and multinational corporates as well.
Okay, well, I hope that's helpful to our questioner. The second question, which we haven't answered, is this. In the current day, technology development does appear to be the core challenge. Rather, socio-political unification and global financial balance seems to take precedence. In other words, political issues are taking precedence over technology development. So technology development is being slowed down. Perhaps the banking infrastructure should follow suit of further advancement on the UN's SDGs. I assume that means the Sustainable Development Goals of the United Nations. The question appears to be this: what does the panel think about large global financial institutions such as the IMF should they respond to sustainable development goals? What part, I suppose, can digital payments technology play in sustainable development? Has anyone got a thought about that? Put your hand up if you do.
I'll offer a view there. I think
thank you, Elif. Yeah.
We have one. There is one possibility here, which is that if we can make particularly some of the cross-border payment stuff easier, then the way in which we redistribute money to some of those economies will improve. So, to the extent that it becomes cheaper to send money from Dubai to Bangladesh and from Dubai to Pakistan, that ultimately is helpful. It seems that a disproportionate share of those remittances gets eaten up by costs. I'm currently of an age where I got to deal with offspring being at university, and if you in the developed world you use Revolut, send money, fantastic, it goes really quickly. The cost is quite marginal, yet people who are working in the Middle East sending money home, the remittance costs are huge, and this is something that Facebook pointed out when they launched their Libra project. So to the extent that we can have more inclusion through the use of technology, that's going to be good. And to the extent that we can stop overcharging, let's leave it at overcharging just for one of a collective expression, those who need the money most, that will probably be good for regions that are otherwise underserved. That'd be my sort of 10 cents worth on that topic.
Excellent. No, that's a good answer for Joshua Anthony, that cutting the transaction costs for remittances is progress. The penultimate question is, how can one address the requirement of anonymous payments like we have cash? So how can you make an anonymous digital payment? Cash, nobody knows who you are, don't care about your credit risk, no questions asked. Can we reproduce that in the real world, David?
I'd maybe say I'd be cautious around this panel now giving advice on people how to make payments and hide where it comes from. I'd probably caveat that instantly, particularly since we're on Zoom, and I believe I've read a lot of articles around what institutions in the world of what governments can watch us. My view is that actually the benefits of digital payments is exactly that. You can avoid the risk of an anonymous payment. You can avoid all the downsides that come with anti-money, money laundering, and moving money and funds to places they shouldn't be going. Or actually, I would counter it and say we don't have a goal or a desire as a network to help facilitate anonymous payments. Quite the opposite, actually. That by using digital payments, you enable much better controls today and will ever in the future as those continually evolve and improve. To have a tighter control around making sure money doesn't go where it shouldn't go, but also that it goes where it's meant to go.
You were agreeing there, Gregor. Anything to add?
No, I was agreeing fully. I was laughing at David's.
Okay. One final question here, and this is really for you, Marjan. Ripple argues that SWIFT payments demand stagnant unlocked money in different Nostro accounts. Is SWIFT getting into blockchain? And even maybe it's for you as well, David. Are you getting into blockchain?
Yeah, sure. So to me, there are two different statements, though. I think one is a statement around how people who use our SWIFT network settle. Basically, most of our majority of our users settle on a Nostro-Vostro model. Now, that's not something SWIFT dictates. It's what a lot of the financial institutions who choose to use our network use as a mechanism for doing it. To offer different mechanisms to settle, I think, is the question there that I would answer first. Is SWIFT looking at other mechanisms to allow facilitation of?
The question is around money locked up in different Nostro accounts. It's a liquidity question, which has.
Yeah, it is, and I think the answer there is it comes down to settlement, right? Which is are we looking to enable banks to facilitate different settlement models for that liquidity? The answer is yes, always. I think the second question around is SWIFT getting into blockchain, I think, is a different question, because blockchain is a technology mechanism that could be used to tackle that problem, but there's one of many. So yes, we look at blockchain regularly. Yes, we use it in certain spaces and utilize it. There's also many places where it could solve solutions that there's other technologies and mechanisms that could as well. So I'd be a little bit more generic around the second part of that question. But for the first, yes, we do look and are looking at how to facilitate different types of settlement models and be more agnostic to that rather than the traditional Nostro-Vostro liquidity management mechanism.
Okay, Marjan, very last word of the entire panel will come from you. It's about whether Ripple depends upon money being locked up in Nostro accounts.
No, I think the way that the correspondent banking is working is precisely based on this Nostro-Vostro, and this is creating lots of trapped capital. Now, the thing is, okay, is there any way of doing that? And I think I refer that to in the beginning of one of the questions is there any way to source on-demand liquidity? And this is not necessarily for US dollar or euro, it's more for markets that you don't necessarily want to keep liquidity and you want to really move funds when you need it. So the way that we are working on this, and this is a live product that it is used in multiple corridors, is using XRP, which is our native crypto assets, as a bridge between the two let's say fiat currencies. And this is completely revolutionizing actually the way that the pre-funding is happening today. So you really on the fly, you move funds. and we extend these services now to more and more corridors, typically corridors, exotic corridors with lots of challenges, like Philippines, very soon in Brazil. So there are, let's say, there is a big agenda and roadmap on that. So this is changing the Nostro-Vostro relationship.
Mm-hmm. Thank you very much. I think unfortunately we really must stop there. We've run over by 10 minutes. So I'd just like to thank you, Marjan. I'd also like to thank Gregor Dobby of Vocalink and Janish of Fedor, Olaf Ransom from Finality, and David Watson, thank you, of Swift. Thank you all very much. And thank you also for those of you who are watching and listening for your engagement, and especially for your questions. And with that, I think we must say goodbye and sign off. So it's goodbye from the 6 of us.
Thank you.
See you all soon, I hope, at another Future of Finance event. Bye-bye.
Thank you. Nick. Thank you.
Thank you.
Thank you.
Thank you
Bye-bye.
all.
Thank you, Dominic, and thank you to our panel. Please go to our website to see the video and the written summary of this discussion on www.futureoffinance.biz.